Hello traders, Vladimir here from Home Trader Club. Welcome to the weekly Forex forecast. In today's video, euro dollar, pound dollar and pound yen, following your request guys. But before we start, big thanks and thumbs up to EightCap broker for supporting our community to enjoy all the special offers we have with EightCap broker, including the access to Home Trader Club, private mentoring sessions, live trading room, trading systems, the SRS, the Forex BBB Pro, the indicators we have in the marketplace, anything of your choice. Please refer to the link below this video in the description. The first pair for today would be the euro dollar, following what we discussed in our analysis. In the previous week, our plan was sell the rallies on the euro dollar as long as this volume profile zone, the classical balance zone, holds. After all the roller coaster we experienced during the week with the CPI numbers and the PPI numbers showing that the US economy is getting the numbers the Federal Reserve wanted to see in order to be able to cut the rates, then comes the Federal Reserve and throws some cold water on the market. Why? How? The numbers are good, not consistent, not good enough. So the market anticipates one cut in 2024, 3 cuts in 2025. That's why after the amazing start, the market cooled down and the opposite direction found place while the dollar still remains strong. The question is what's coming next. So according to the analysis we discussed on the last several weeks, if you follow our channel, if not, you are very welcome to subscribe to our channel with the subscribe button below this video. So one of the scenarios we were following is a classical ABCD correction to complete this zigzag. With that idea in mind, this low and that low will probably be retested. That's for the longer view. However, on the shorter view, take a look what starts to happen here. Let's go back to the daily chart. So the daily chart did hold the classical supply area, proven area of sellers. And all that happened to be after making the higher highs here. What do? Higher highs here versus lower highs on the MACD and the RSI, completing bearish divergence. After that, a move down to make a bearish convergence. You can see that these conditions are very powerful when they happen on the supply areas. Like last time what happened here was the false breakout on this supply. This is, by the way, the FBCI indicator, the false break convergence indicator, one of the best creations you can have as a trader. And you can find this link to this indicator below this video in the description. Now the same happens here. After the false breakout we got it 10 to the downside. Now here is on the 4-hour chart how that looks like. Same story, by the way. It happened to be the false breakout on the very peak, right on the supply convergence, which means sell the rallies. So the question is what's next. Right now, on the while the longer term is probably still under some bearish pressure, shorter term we are now on some key demand levels. And with these wavings coming to these demand areas and the bullish divergence beginning to form, I believe the euro dollar has some chance to start and slow down, and on the short term maybe even provide some buy opportunities as a pullback. Okay, so I believe if we do face new lows, which is very likely with the momentum, they could easily bounce back before further continuation down. What would be your thoughts about the euro dollar? How low do you think it can go from here, or how high do you think it is going to make on these levels? Let me know in the comment section below this video. Our next pair, pound dollar. Before that, I would like to ask your support and your help. If you find value in this video, if you appreciate the analysis, the trading opportunities, please hit the like button. Feel free to share it with anyone who you believe can benefit watching that. And if you are new to our channel, please consider to subscribe with the subscribe button below this video. Few words in the comment section would be fantastic help. Thank you very much in advance for taking the time and to help me and my channel with all the YouTube algorithm and how it works. Thank you. Now, last week we were talking about the scenario that if this low is broken, sell the rallies would be our plan. So this low was not broken, but what we did get here was one more false breakout, fake high. And I want to return to the original analysis we started to follow. Similar to the euro dollar, the pound dollar has the possibility to complete a zigzag, which means 2 waves up, 2 waves down, or at least some sort of a range. If that's a range, I expect one more drop before the breakout. With that in mind, take a look how strong the attempt was during the week of the pound dollar to try, right? It happened right when the CPI data was published. The market really tried hard to make a breakout, but not yet. It breaks, but yet holds. So as we discussed on the last several weeks, if it bounces off the top of the channel, which is very possible scenario, what could happen next, the market drops down to find some bottom before actually breaking above the main channel. For that, we have several key levels on the go. We have this demand area and this demand area. They would be ideal zones to hold if it comes closer to that. So what do we have on the shorter term? If we go to the 4-hour chart, the pair completed another false breakout, which means fake high bearish divergence and anticipation of the move down. Last time it happened, as you can see once again with the false break indicator, was here, and that's where the first push down happened on the market. Right now though, it's also creating convergence, as you can see on the indicator here, right, which makes lower lows on the chart and the indicator. So from my point of view, as long as the daily top of the range and this high we have on the 4-hour chart manage to hold, for me any short-term rallies could provide further push down on this pair. What do you think about the pound dollar? Are we going down from here? Is that just a trap and we are going to 133, 135? Let me know. What do you think about this one in the comment section. And the final one for today would be the pound yen. Pound yen is now approaching to the key zone here. Lots of sellers around this area and of course the previous peak. This is really significant zone. Besides that, if we take a look on the Bollinger Bands from this breakout, that's again one of my custom indicators, this Bollinger Band. You can get your copy with the link below this video in the description. We can see that we are now on a duplicated level. If we go with the bigger candles where the official break and close happened here, we can see again the classical dynamic resistance here with the Bollinger Bands is there. RSI close to overbought conditions. Last time it happened was here. So with that in mind, from the monthly chart, we're not going to trade it, but from the monthly chart, take a look where do we stand on the Bollingers. We are riding on the upper Bollinger Band for over than 20 candles. Last time it happened was here, and we all remember the reaction. Last time before was happened here, and again strong reaction to the opposite Bollinger Band. This time though, unlike all the others, we also carry a bearish divergence on the moving average on the weekly chart. Absolutely powerful sign. On the daily chart, we see a false breakout here. Last time the market was trying to make a false breakout was here, and it didn't make any changes at that time, but now with the reach to the weekly divergence, new high with the monthly Bollinger Band application and this false breakout and the hold below the 200, this is a significant level. It starts to give the possibility of the move down. So the way I see that on the 4-hour chart, and it's very important to mention, it is more aggressive approach because the longer term still didn't change the trend, but what happens on the 4-hour chart at the end of these 3 waves under the bearish divergence condition, when the market making the higher highs but the indicators make lower highs, that's the bearish divergence. We start to see big 2 candles here on the bearish direction, right? Breaking this low, making lower lows on the chart and the indicator. Again, classical convergence condition. So what I will really want to see is this trend line broken, some hold below there, came the price to come to retest this zone and this volume profile area, and from there look for the sells as long as this high holds. Because if this high will not hold, then of course the attempt might be just too early. So for me, as the market starts to flip the 4-hour chart making lower lows and the trend line potentially to be broken, I will be looking to sell these rallies. Let me know, what do you think about this one? Is that time to sell or more further rallies to come? Let me know in the comment section below this video. So that's it for this one. Thanks for watching and big support back from me for your time. If you find value in this one, please hit the like button and consider to subscribe to our channel. I also want to invite you to our trading family, the Home Trader Club, where you will get your access to our full comprehensive courses and media zone, real-time trading education, real-time trading opportunities, so much more. Join our family with the link below this video in the description. Meanwhile, thanks again for watching. Best to you and yours. I wish you a wonderful weekend and good trading. See you around with more. Bye for now.